Welcome to the Hurst Trading Room. My name is David Hickson and this is part 2 of the video update for the 15th of December 2014, in which I will be discussing what has happened in the FTSE and the difference between what I believe is playing out in the US markets and in the European markets, or in particular in the British market, the FTSE, which it seems to me has turned bearish. As always, before we go into the details, please make sure that you have read and understood these disclaimers. The European markets are looking slightly worrying. First of all, let's have a look at what happened in the FTSE last week. Look at this really strong fall. We were expecting price to move down into the 80-day cycle trough, but as I mentioned last week, I wasn't expecting a very, very strong move down because I am expecting this 80-day cycle to be bullish, right? I've already worked out the underlying trend for the 80-day cycle, and it's no different in the FTSE. We have an underlying trend of +3, or perhaps it's +2. Nevertheless, it is a bullish 80-day cycle. And this is a bullish 80-day cycle that you can see here. I'll demonstrate that because here is the M shape, and so as you can see, the peak following the 40-day cycle trough is the higher peak. So we have a slightly late peak, which is one of the definitions of a bullish cycle. So far, price is still above the starting level, which was below 60.50. So far, this is still a higher ending cycle than the level at which it started, but it is beginning to look really rather worryingly bearish. And let's take a look at the other FLDs, and you can see how, although all the other markets respected the levels of those FLDs, the FTSE has done something very interesting. Let's go through each one of them, and that is that it has simply just dropped down below all of these FLDs. Here's the 40-day FLD right up at the level of the 20-day FLD over here, and so it crossed down below the 40-day FLD. Last week there wasn't any FLD there to catch the movement, which is one of the reasons why price dropped so sharply. The next FLD is, of course, the 80-day FLD. There it is. It hardly caused any kind of a hesitation in price. Perhaps there was a little bit of a level of support there, or it takes a stretch of the imagination to see that. And so it sliced right down through that 80-day FLD. Now, I've already explained how I expect the 80-day FLD in the other stock markets to provide a level of support, and I did in the FTSE as well. So that is why I do remind you that these guidelines for how price interacts with the FLD are guidelines. They're not absolutely strict rules. Sometimes you see surprising things happen. What has happened now? Well, price has come all the way down to the 20-week FLD. Here it is here. You can see on Friday it interacted with the 20-week FLD. It'll be interesting to see what happens to the FTSE. At this point, is it going to drop down below the 20-week FLD? I'm not expecting it to. If anything, I would expect the 20-week FLD to catch price at this point, and price might track along the FLD a little bit. And of course, I am expecting a bounce out of an 80-day cycle trough at this point in the FTSE as well. There's a strong temptation to look at last week's price movement, and let's just clear those FLDs. There's a strong temptation to look at last week's price movement and to say, wow, prices has been falling. How can you possibly think about buying? Okay, as a cyclic trader, you will find yourself, whenever price falls, you start thinking about buying. By definition, somebody who trades cycles in markets is a contrarian. As the markets go up, you start looking ahead and start thinking about them coming down. As markets come down, you start looking ahead and start thinking about them bouncing back up again. And so I am thinking about a long trade in the FTSE. However, the movement in the market in the FTSE last week was very worrying, and let me quickly explain to you why that is. Here is a long-term view of the FTSE, and I spoke about the long-term view in the S&P 500 2 weeks ago, and if you didn't see that, go back and take a look at it. In that long-term view, I mentioned how price is heading up to a peak of the 9-year cycle, and indeed in the FTSE it is also heading up towards a peak of the 9-year cycle. Let me display some semicircles here, and let me show you what is happening. Perhaps we should switch to a weekly view. There we go. That gives us a slightly better view of what is happening. So what is the long-term view in the FTSE? Well, it is very similar to the long-term view in the other stock markets that we are trading. There is, however, a subtle difference. Here is a trough of the 4.5-year cycle, which occurred, according to this analysis, in 2011. And in most of the other markets, I believe that the 54-month cycle trough occurred in 2012. We could debate it, but I'm not going to dwell too much on that issue here. But I would like to show you what it means in terms of what has happened. We have had two 18-month cycles since that point. There's the first one, there's the second one. Now in the FTSE, just as in the US markets, I am expecting a peak of the 9-year cycle to form round about now. And when we took a look at the longer term view in the S&P 500 2 weeks ago, I mentioned how I was expecting it soon. But let's take a look at the shape of these two 18-month cycles. Of course, there are three 18-month cycles in each 4.5-year cycle. And so we have already seen the first one and the second one, according to this analysis. And the shape of the first 18-month cycle was something like this. There is the M shape of the first 18-month cycle, a good bullish cycle shape. Can you see that? A very late peak. The peak occurred very late in the cycle, and of course the cycle ended at a much higher level than the level at which it started. That is what we expect for the first cycle in a 54-month cycle, the first 18-month cycle in a 54-month cycle. The second 18-month cycle in the 54-month cycle we expect to be less bullish. Here is the M shape of that cycle. Can you see? It was a much less bullish cycle. It's fairly obvious. We did have a later peak, but it was only slightly higher than the first peak of the cycle. And although the closing trough, the final trough of the cycle, was slightly higher than the opening trough, it wasn't by very much. So that's what I would call a neutral shaped cycle. So we have a move from a bullish cycle to a neutral cycle. And the next cycle is expected to be what? Well, it's expected to be less bullish. Less bullish than neutral is simply a nice way of saying bearish. So I am expecting a bearish cycle to happen over here. So whereas the US markets, I believe, will still reach higher price levels and form their 9-year cycle peak at a higher level, I think it is very likely that in the FTSE, and potentially in the other European markets as well, I think it is very likely that the 9-year cycle peak has already occurred and the market is moving down. So this brings up an interesting difference between the US markets and the European markets, or let me just speak about the FTSE for now, between the FTSE and the American markets. Markets move with a great degree in common. We are expecting, as you know, an 80-day cycle trough to form in all stock markets around the world. But although they are forming the same cycle trough at roughly the same time, it won't be exactly the same day, and they might not all be the 80-day cycle trough, but most of them, I believe, will be. So although they're forming the same cycle troughs at the same time roughly in the markets, we will get slightly different patterns emerging in those markets. The bottom line is that I think that the FTSE has turned the corner and is heading down now into the next 9-year cycle trough. Here you can see that according to this analysis, the 9-year cycle trough is expected over here sometime in 2016. As you know from the longer term picture of the US markets, I expect the 9-year cycle trough to occur later in those markets. That's because there is a difference between these analyses. But the point is, it looks very likely that the FTSE has turned the corner and is heading downwards, as you can see. And so although the FTSE is going to bounce out of an 80-day cycle trough within the next few weeks, I believe that the overall tone of the British markets has turned bearish, whereas the overall tone of the US markets is still bullish. But I am going to be watching them very carefully because I expect the same thing to happen to the US markets. Thank you very much for joining me this week in the Hurst Trading Room. If you are not watching this video on the Hurst Trading Room podcast channel, please make sure that you do subscribe, because that way you will be notified whenever I publish a new Hurst Trading Room video. I won't be publishing over the festive season, and so the next time that we will meet will be early in 2015. Have a great festive season and a wonderful new year. I look forward very much to helping you to make 2015 a profitable year with Hurst Cycles.